What if I told you that the market is not moving because of your indicators? What if I told you that the market is not moving because of your RSI is overbought or because of your MACD crossed? And no, the banks are not watching your individual stop loss. The real question here is not asking yourself if market makers are hunting you. The real question is, why do price seems to reverse where retail traders feel the most confident? In this video, I'll be showing you how institutions actually think, how big banks trade, and why retail traders are always failing, and what you should do to stop being the liquidity big traders need. So, welcome to the video, guys. Let's start with this. A lot of retail traders, actually think is, they need to have a complete technical concept before they can be profitable in the Forex market, or they need to have the complete set of indicators that confirms to them when to buy, when to sell, or that trading is all about price coming to a supply zone, another block, all of these. All those concepts are beautiful. They are fine. People who have put up those concepts did a whole lot of work and needs to take a lot of credit. But that is incomplete, and that is what differentiates average retail traders and professional traders. Professional traders are always asking themselves these questions, especially the ones that are seated, on the floor with big bank, hedge fund institutions. They're asking themselves before they buy, who wants to sell, or who are the people who wants to sell. Before they sell, they're asking themselves, who want to buy. These are things that are actually, giving them, that confirmation when to buy and when to sell. They're asking themselves this question: what macroeconomic data is driving this particular currency? What liquidity are they going to, use, before they actually buy or sell this position? They're asking themselves a whole lot of questions. And that is exactly what retail traders, these days should be asking themselves if they actually want to be profitable in the Forex market. So we are going to take it step by step in this video, how you should be thinking as a retail traders and what professional traders are actually doing to stay consistent in the Forex market. When professional traders come and they want to, take positions, in the Forex market, they ask themselves a whole lot of questions. They try to understand which currencies are strong and which currencies are weak. They understand, a whole lot of, or a wide range of what we call economic indicators. They are not just making their decisions based on what, they see on the charts and all of that. And I'm going to take you guys with my Excel sheet here, and you could look at coincident economic indicators. When we say coincident economic indicators, they are indicators that tell us what is happening right now in the economy. So this is an aggregate of different, economic indicators for different, economies, individual economies, as you can see here, that has been worked upon. Okay, and now they'll have that. So take a look at Canadian dollar, GBP, NZD, at least the first three best performing currencies against the last three: Euro, JPY, and the Swiss franc. If we go to the chart currently and we try to look at what these currency pairs are actually doing, okay, let's say Canadian dollar, Swiss franc, that is CAD Swiss franc, and let's look at the pair of CAD Swiss franc, and let's look at the trend. You could see it's not a coincidence that CAD Swiss franc has been pushing to the upside lately. It's never a coincidence. This, is as a result of what, the economic drivers are telling professional traders. And these are the data, the numbers, the indices they want to look at before they begin to make their decision. Okay. So regardless of any technical concept you are using out there, you need to understand what is actually driving this price. Because understanding what is actually driving this price is very crucial for you to become successful in the Forex market. So this is what is making, these, traders we call professional traders or big banks. There is nothing special. I keep telling a lot of traders that, it's very funny for you to lose money in the Forex market over something that everybody in the world is aware of. Something that is not even a secret. But it's all about, the educational materials out there, for retail traders to use and study and understand what is actually driving the Forex market. So if we go on further and look at maybe the pair of GBP as against Swiss franc. So we can do that. Let's go to GBP Swiss franc. This is just talking about data, and this is one of the pairs I even traded this week. Today, in fact, it was a scalp position, just taking a short-term buy here. If you look at GBP Swiss franc, you can see on the long run what GBP Swiss franc has been doing. That tells you a whole lot. This is not actually, when you look at this in terms of your technical concept, you would find a technical confirmation that is telling you to buy GBP Swiss franc. But there is a fundamental reason if you ask yourself, if you actually understand that you could have taken advantage of this big move, this big price swing. If we try to measure that right from this low, at least up to this high, price has moved, more than 450 pips to the upside. So imagine you were aware of what is actually happening here. That could have been a fantastic, opportunity for you as a trader. And now, if we go further to say, okay, the next one, NZD Swiss franc. Let's look at the pair of NZD Swiss franc and, look at what is actually happening in this pair. So this is a pair of NZD Swiss franc. So you could see, the bullish move we have seen so far in NZD Swiss franc. These things are not luck. These things are not by chance. These things are actually, market actually moving based on, market forces, economic events, economic data, geopolitics. And we are going to be talking about some of these things in this video, but we are talking about with data. So you see how, what is actually driving the economy. What is driving, the currencies are strength of the economy. If your economy is weak, for example, we can't say the Nigerian exchange rate has been stable, but we can't say, the exchange rate is so good. Okay. And we can actually tell that because of how the Nigerian economy is. The economy is not good. The economy is not stable. And that is the reason why the Naira is so weak. But in terms of exchange rate stability, that is the actions of the Central Bank of Nigeria that they have been, helping to stabilize, exchange rate. At least people who are importing, into the country can actually now predict and relax and do their business. Okay, but that is not what we are actually trying to talk about in this video. So that I don't deviate, that may be sounding too technical. So if we move further and you look at, let's say, next one, Canadian dollar as against JPY. So if we go to the chart again and look for the pair of Canadian dollars against JPY, you still see the strong bullish move to the upside. These things are not by chance. Okay, these things are telling you what is happening in the economy right now. And you can actually see it playing out on the chart. So this is what retail traders are not aware of, that they need to be aware of macroeconomic data. That is one. We are just going to have a look at most of these pairs. Before we begin to look at on the charts, technically as well, how retail traders are also failing. But we need to understand the process of what professional traders are doing. Everybody wants to make money in the Forex market. Everybody wants to know what are the professional traders doing. But when you begin to bring some of these things, traders feel that, you have like, this is boring. Show off the charts. This is what a lot of traders, sometimes when I post videos and a lot of that, some people begin to tell me I'm not serious. Post charts, want to see charts. And I'm glad, I'm happy. I don't take those things too personal. I don't even take them personal. Because I know this is the understanding these traders have about the Forex market. And it is our duty, out of goodwill, to make them understand that this is not actually, the right way to follow the Forex market. So if I'm not able to take criticism and, come and help traders, so why am I on YouTube here, trying to explain some of this? So I need to, take that with good faith and correct some of those traders. The most important thing in the Forex market is to make money. It's not all about who knows it all and all of that. That doesn't make any sense. The most important thing is sharing ideas and knowledge. If you have any idea, you put it out there on YouTube and help other traders, just like I'm doing right here. That is the most important thing. If we go to the next one and look at card card CHF, okay, and Euro card. Let's look at card CHF and Euro card. So we have actually talked about we have talked about card JPY. So let's take it step by step. Let's look at GBP JPY. Okay. So if I go to GBP JPY, I still see the same thing. You can see how price has been pushing to the upside. That tells you that same macro data fundamental bias, what is actually making currencies to be strong and weak. We look at the next one, NZD JPY. If we go to the chart and look for NZD JPY, we can see what NZD JPY is doing. This is since the 24th of June and since this month. You can see how NZD has been performing massively well to the upside. That tells you, what is really driving this forex market. That this forex market is not being driven by your candlesticks or anything. Okay, those things matter. They are important. Okay, but learning to combine your technicals with other aspects of the financial market is what keeps you profitable and consistent in the forex market. That's my own opinion. Everybody, but we all have to, if you are sincere with ourselves, understand that most of the practices that is done in the retail trading industry are not helping a whole lot. We need to speak more about fundamentals, sentimental analysis, professional trading approaches that helps people or traders to become profitable in the forex market. If we go to the next one and we have a look at GBP, Euro GBP. Okay, so let's look at combined with Euro. If we look at Euro GBP, CAD, let's start with CAD. Euro CAD. So we see if Euro CAD has actually been pushing to the downside or not, because Canadian dollar is ranking high. So when you look at this, you see what Euro CAD has been doing, for weeks since around the 18th of June. You could see the direction of Euro CAD. Okay, technically, we can tell what is happening in terms of structure, but I want you to understand, what is happening right here. So you can see their price has been pushing to the downside. That tells you, the effect of macro data. You look at Euro GBP. If you go to Euro GBP and we see, okay, what is happening with Euro GBP? So you could see the direction of Euro GBP to the downside. So that tells you again what is the real fundamental direction or the real trend. So you can see it's not all about technical. So my technical analysis here is just to come and analyze the price chart and know when to enter, the right time to scale in. Okay, but understanding or having in mind that fundamental bias, I know what I'm looking at for. So if I'm looking at for just a technical pullback, I know that I'm actually looking for a technical pullback, but knowing fully that I'm not following the fundamental direction. But the ideal thing is always be patient and follow the fundamental direction. That doesn't mean you are going to be right every time. No, nobody's going to be right 10 out of 10 in this forex market. Okay, if you are right 6, 7 out of 10, you are too good. You are too good. Okay, so that is just it. Now, if you look at a pair like NZD, Euro NZD. Okay, now let's look at Euro NZD to see if Euro NZD is even pushing to the downside. Let me open the pair of Euro NZD. You can also see for yourself. So these things are information we are seeing from macro data telling us what is actually happening. But professional traders are not only asking themselves questions about this macro data. There are other factors that happens around the world. Okay, like we use in our professional in our floor, when we are looking at among other traders. Okay, this is something I built myself. So incorporating it with AI, to even understand what is actually happening around the world in terms of geopolitics. These are questions professional traders are asking themselves. When you say geopolitics, this is asking yourself, in terms of political actions happening around the world. Okay, there is a conflict happening in the Middle East between US and Iran. How is that affecting the forex market? Okay, simply, let's take crude oil as a case study. The geopolitical conflict in the Middle East is going to affect crude oil prices simply because if there is war there and there's a shipping route, okay, there, which is called the Strait of Hormuz, that connects the Persian Gulf and the deep Arabian Sea. If ships that are carrying crude oil are passing and they are attacking them, they will be afraid to pass. And if they are afraid to pass, it means they are not going to move again to go and sell crude oil to other parts of the world that needs crude oil. And this scarcity is going to create scarcity, and this scarcity is going to cause crude oil prices to be high. Because if something is scarce, that means you can't find it anywhere. Anywhere you see it is going to be expensive. So imagine, maybe I used to remember during my childhood when my mom, maybe sent me to the market to say, okay, go and buy fresh tomatoes. And, you go to buy some of those things, and maybe the old woman selling those, perishable people like fresh tomato tells you, fresh tomato is now scarce. That is why it's expensive. So even with the huge amount of money maybe you came to the market with, but you can see that you can only pick some, just few things. Okay, because that particular commodity is scarce, and that is the reason why crude oil prices are pushing to the upside. With this recent heightened tension, that's the reason why it's pushing to the upside. So simple, nothing more, nothing less. Okay, so understanding this, geopolitics, is very crucial. If you can see here, during the week while I was trading, I was combining what's happening geopolitically, on my Excel sheet here, trying to combine it with what I have in terms of macro data. This is using macroeconomics. You don't need to be an economist like I am, to understand, which currencies are strong or weak. These things are very basic knowledge that every trader out there should know. Okay. And when you look at this, you see CHF, Euro, and JPY as my most vulnerable currency. This is the suggestion, okay, that it is suggesting to me, combining my macro data and what is happening around the world, that, CHF, JPY, and Euro are the most weak currency. And I should be looking at CAD and GBP as the most strong currency to buy. So that means if I want to long, I need to be looking for, to taking trades in favor of Canadian dollar and GBP, and as against Swiss franc, JPY, and Euro. So these things are data that I look at before I even come to the chart to even begin to make my decisions to either buy or sell, the Forex market. So my technicals is just timing. So for example, Euro GBP can be telling me that I should be selling Euro GBP, but technically it is not said. That is where the role of technical analysis should come into play. So another thing again you need to consider, if you want to trade like professionals, is also you need to follow, what we call commitment of traders. Like we do have in our, trading floor at Bullish Forex Academy. We try to track what, big banks and institutions are doing. When you go to the COT website, you will see them, releasing data of, different currencies. And what we did is I did this personally, try to put everything, in an Excel format, try to understand the strength and weakness of every currency pair, at least the 80 major currencies, week in, week out. If you trade currencies like South African rand, Mexican peso, you will also Mexican peso, you'll actually go to see it there as well. So these are some of the things you need to do to always put yourself ahead. So coming into the new week, when you have this currency pair, you try to also understand, if also an added confluence, if sentiment is actually supporting what you have, in terms of any currency you want to, either buy or sell. So when you come, you now, technically look for those opportunities. Okay. And now let's look at technicals. Okay. Putting everything together, how we can actually combine all these things with technicals, because I've been saying some things that are not familiar with a lot of retail traders. Because when you mention fundamental and macroeconomics, retail traders begin to run. Okay, people and retail traders want to hear when you bring the chart, discuss the chart. Like I said, it's very good. You cannot be a profitable trader if you don't have a good technical concept. But at the same time as well, my own opinion, you can't also be a profitable trader if you don't understand fundamental analysis as well. My own opinion, you can say I'm wrong, but data don't lie. When you look at your data, your trading history, and begin to see for yourself, okay, if you want to tell yourself the truth. Okay, so looking at the chart, right here of Euro GBP, traders see price differently, retail traders, but professionals see it in a different way if you want to look at it technically. So the technical concept I've seen a lot of retail traders use is the ones like maybe ICT, smart money concepts, respect to all those things. They work. Like I said, if you have a good concept and combine it with fundamentals, we're actually going to make money. We are not trying to know which concept works and the one that doesn't work. The goal is to make money, okay? But there are the basics you need to do. That's what I've been saying. You don't need only your technical analysis to make money, which combine with fundamentals. But with the technical concept I see, most professional traders use the wave theory. I'm not talking of Elliott wave analysis concept is what I'm talking about. And when you look at wave analysis concept, it gives you, for me, it is the purest form of understanding market structure and why price move when you combine it with fundamentals. For wave analysis, it says for every up move, there's going to be another up move. For every down move, there's going to be another down move. Anything happening in between is called correction. And these corrections are minimum 3-wave structure. Okay, I don't need to say much. Now, looking at that on the chart, let me just show you that. You could see here now, when you visit Bullish Trend Forex Academy on YouTube, always watch our weekly Forex focus. Like we are going to have, one we are going to be publishing tomorrow. So every weekend is something we have planned on doing every Saturday. So you need to watch that. It's going to help you to be on the right side of the market. Okay, knowing currency pairs you are watching and the reason why you are watching it. I am the one that does that personally every weekend. So with the concept I just showed you here, for example, let's just look at from here to here. Let's not dive into a whole lot of things. What I'm showing you works on any time frame and on any asset. So if you look here, you can see that price gave us an impulse. An impulse is usually fast and sharp, okay? But here you can see even before price continue pushing to the downside, you could see 1, 2, 3. That's why I told you corrective structures are minimum 3-wave structure 1, 2, 3. But even inside this thing we call correction, there are still impulses, okay? So that tells you that if you get a move like this and see a move like this is not a correction. Like you saw here, this is just a pullback, okay? It is just part of the correction, not correction. Correction takes time. So that's why you can see, a very slow and messy move and then upside. So you can see that thing I showed you guys. If we get a move like this up, for every up move, there's going to be what? Another up move. Anything happening in between this up move and this up move is correction. And they are usually slow and messy. And most times minimum 3-wave structure. You can see that for this up move, we got this up correction and very slow and messy. So here is the correction and immediately it ended. So you can see even the last candle that gives you, even when you have entered the trade, evidence of institutional presence. Okay, that really there's an institutional activity here. Look at this. Okay, this healthy candle tells you even in the lower time frame. Okay, I was explaining in one of the videos I posted today, about GBP Swiss franc. What made me to enter GBP Swiss franc. Okay, if I go down to the 5 minutes time frame, when I was running some, here was a statistical level, calculated. It's part of what we use in trading, and it gave me the level where I want to trade. But immediately price was approaching there, I'm not interested to just buy immediately. It's a level. What I'm waiting for is to see evidence of institutional activity. Okay, I'm not even talking of looking into the footprint charts to see inside the candles and to see the fight between buyers and sellers. Okay, but here even the healthy candles, the length of the candle and the strength, the momentum of the candles tells me that somebody with massive pocket is defending this area and the person wants to buy because there has been sellers. Okay, so the person wants to buy, or the big institutions, they want to buy. But before then, you can see it's a very massive push to the upside. And before then, if you look at the 5 minute time frame here, what I showed you again, the fractal nature of the market that most retail traders are not aware of. You can see impulse, very slow and messy move. For this downside, we got this down. So here, altogether is a 3-wave structure, 1, 2, 3. And this was where I began to take my buying opportunities. If I try to show you that on my MT5, I don't know if you can actually see that. You can see this is a GBP CHF. So look at it on the 5 minutes time frame. So you could see it's actually the same thing. Let me get where I entered, so you could see that. So still the same thing. Okay, so that is just basically how this market works, the fractal nature of the market. So this is some of the things retail traders are not familiar with. So it's not just all about you are buying because a candle is forming at this level. No, Now, behind even the structural analysis I just mentioned, but you can actually see that there is, big backup behind what I'm doing. You can see GBP and you can see Swiss franc. With the current I showed you, I bought GBP Swiss franc. So Euro GBP, is meant to be pushing to the downside, but technically it's not ready. Okay, so it is just a technical pullback. That's the only thing you should be taking advantage of. Okay, so that is, it helps you, because I in the weekly forex forecast I did last week, I said I'm anticipating something of this nature, and that's what I'm anticipating here. Maybe moving into the new week, we may begin to see, a corrective structure down before another push up, and then maybe downside again. Okay, we're still watching data, and a whole lot of, especially inflationary data, are beginning to suggest, weakness, in the euro area. Okay, not just USD, but euro as well, and we are seeing that push down. But the ECB has not yet committed to any rate path. Maybe in terms of cost, like that's what I'm just trying to say. That is cutting interest rate, because when central bank is expecting to cut interest rate, the currency will begin to weaken. Okay, so with professionals don't wait till central bank cut interest rate. Market moves based on expectation. If I use, for example, a weather condition to explain something for you now, is the example I usually use to explain economic indicators. If rain wants to fall, you will see that there's going to be thick clouds. Okay, the cloud will become thick. You will see probably heavy wind. Okay, maybe if you have some clothes outside, you are not going to wait till rain will begin to fall to beat those clothes before you bring it in. No, you are going to move in and bring in those clothes or whatever you kept outside, so rain is not going to beat those things. So that is the clue, because market moves based on expectation. Market won't wait till that particular thing happens. Okay, if you hear that maybe you go to school and they said maybe when your late payment is going to attract maybe extra, maybe 50,000 naira, you are not going to probably wait till that late payment. You want to pay now, that the school fees is still cheap before it gets to late payment. That is exactly how the market moves. Okay, and this is what differentiates professionals, and average retail traders. So the earlier you begin to ask yourself some of these questions, what professionals are doing and how you can actually do the same thing they are doing, both in terms of technicals and more especially in terms of fundamentals. Okay, there are so many sound technical concepts out there, but understanding the fundamental bias behind any instrument you want to trade, be it forex, be it currencies, be it crypto, be it commodity indices, all of that, you need to understand the fundamental bias behind any instrument you want to trade, including stocks. Okay, so that is just it, guys. And I know we have learned a lot from this video that is going to be very helpful for a whole lot of traders out there. So if you have watched till this time, please don't forget to click that like button, subscribe, because when you click the like button, comments, what you want us to talk about, it's going to motivate us. When you click the like button, share to more traders, because not just you are lucky, to have found this content, and I know it's going to be helpful. It's going to keep you aware, and you keep on watching. Not just on this video, you are going to be seeing more information that I'm going to be putting out right here on this channel, to help every trader out there become profitable and consistent in the forex market. So put your thoughts in the comment section what you want us to talk about. Again, I'm going to be looking randomly and be picking topics, okay, aside from the ones I want to talk about, so maybe so that I will know what is going to what you guys want to learn about. Okay, so that I'm going to use that avenue to teach. Okay, and like I said, subscribe if you have not, and click the bell icon so you will always get notification anytime I release a video on this channel. So thank you very much, guys, and see you in my next video. Bye for now.